Hello everyone and welcome to the Cannabis podcast, the show that helps cannabis companies manage their costs and tax liabilities through tax planning and proper cost accounting. I'm your host, Desiree Anderson, certified public accountant and enrolled agent at Tax and Accounting Strategies. I specialize in cannabis, CBD, and hemp tax and accounting. I chose to specialize in the cannabis space because of my long-term expertise as a tax and financial auditor. As a former government tax auditor, I saw the types of mistakes businesses made from a tax perspective, which led me to want to help cannabis business owners and CEOs stay under the taxing agency radar. As a former financial auditor, I know the importance of a financial electronic audit trail. Such a trail gives investors, lenders, and valuation experts the confidence that they need to make financial decisions beneficial to your business. Thank you for tuning in, and I hope you enjoy the show. Hello, everyone, and welcome back to the Cannabis CFO podcast. I'm your host, Desiree Anderson, and on today's show, I'm going to be giving 5 tips to ensure that your tax season goes off without a hitch. Now, I know how stressful tax season can be for cannabis businesses, so it's always best to try and minimize your stress by being as prepared as possible. Okay, so here are the 5 tips. Number 1, make sure that your books are closed out on or before January 31st or somewhere therein. It doesn't necessarily have to be January 31st, but you want to make sure that you're starting the process of closing out your books come beginning of January. Now, as simple as that sounds, you'll be surprised at the number of cannabis businesses that skip parts of this process. Now, closing out your books means that all of your transactions have been entered into your bookkeeping system for the year and that all accounts have been fully reconciled. When I say fully, I mean all of your balance sheet accounts, not just your bank statements, okay? You want to make sure that your liability accounts, like your accounts payable and any loans you owe, are showing the correct balances at the end of the year, and that your asset accounts reflect the correct balances of all of your assets. You want to pay a special attention to your cost of goods sold accounts by confirming that all of your cost of goods have been accurately accounted for. Now, this is especially important because, as we all know, cannabis companies are not allowed to deduct regular expenses. So you want to make sure that you're maximizing your deductions by making sure that your cost of goods sold account includes all of your allowable deductions. Number 2, make sure that you can support your numbers. Now, because the cannabis industry is heavily cash-based, it's really important that you are able to support all of your numbers on your tax return in the event that the business is ever audited. And let's hope that doesn't happen, but you never know. Now, one of the unfortunate consequences of being unbanked, as a lot of cannabis businesses are, is the lack of records that come with certain types of transactions. So you have no credit card. It's hard to get these transactions. And if you don't have a bank account, it can be difficult also to pay attention to what's going in and what's coming out. So as a result, record creation and record retention falls squarely on the business. Okay. Now, because cash transactions don't usually come with built-in records, your company should have policies and procedures in place to make sure that records are created for all cash transactions. So that means that strong record keeping is essential with cannabis businesses. Now, a good idea is to attach each record created to the actual transaction in your bookkeeping system. This way, you eliminate the need to search for records if there is ever a need to support a number on your financial statement or on your tax return. Remember, the IRS already assumes the worst about cash-based businesses, so try not to prove them right, okay? Number 3, make sure that you are working with an accountant who is familiar with the cannabis industry. Now, working with tax professionals that are well versed in cannabis accounting and tax is very, very crucial. Tax professionals can help you, or rather can help your business identify additional expenses that you may not be aware of. They can also help you implement document retention strategies, okay? Now, because of the entanglements and the nuances of 280E, it's also essential that you work with someone that knows their way around tax law. Now, remember, tax law can sometimes be open to interpretation. Therefore, you want someone on your side that is knowledgeable enough to keep you out of trouble and not so aggressive where you feel like you have to watch your back for fear that the IRS may come knocking at your door at any moment. The last thing you want to do is to trigger an IRS audit by including expenses on your tax return that are not allowed. And also, accountants and attorneys can also help you structure your business in such a way that is beneficial to you tax-wise, okay? All right, so number 4, make sure that you prepare and file all 1099s. Now, this is a requirement that some businesses tend to overlook. By law, if you pay a subcontractor $600 or more, you are required to provide them with a 1099 NEC. Now, the NEC is new for 2020. In prior years, non-employee compensation was actually reported on the 1099 miscellaneous. Now it's reported on the 1099 NEC. Now, the deadline to issue 1099s to your subcontractors and to file them with the IRS is January 31st. However, if the 31st happens to fall on a holiday or on a weekend, then it's due the next business day. One of the questions on your tax form asks if you paid anyone over $600 that year. Now, if you answer yes to that question, then the next question asks if you have filed or if you intend to file a 1099 for payments that you made to each person over $600. So make sure that you do that. So when you're filling out your forms, if for some reason you have not yet filed your 1099s when you're preparing your tax return, then make sure you check the box yes that you did pay contractors over $600 and that yes you will be filing your or rather you will be filing 1099s for those contractors. Now, before you prepare a 1099 for a contractor, make sure that you give them a W-9 to fill out. Now, although the main purpose of the W-9 is to collect information that you need to prepare your contractor's 1099, it also lets you know whether or not you are even required to give a person or a business a 1099. Now, if the contractor is a corporation, you're not required to provide them with a 1099. However, you won't know this until they fill out the form, okay? So never take a person's word for it if they tell you that they're a corporation, because you might just simply ask them, oh, by the way, are you a corporation? And they may tell you yes. And it may not be that they're necessarily lying to you. It's that some people really don't know. They believe that if they are an LLC, okay, some people mistake that to being incorporated, meaning they're a corporation. So they may tell you yes, well, in all actuality, they aren't a corporation. So make them fill out the form so that if they claim to be a corporation and then you therefore do not give them a 1099 because they told you they were a corporation, you have a paper trail to prove that they claimed to be a corporation. Okay? Because not filing a 1099 for a contractor with the IRS has very heavy fines attached to them. So you want to make sure you have a paper trail showing that they said that they were a corporation. Now, the longer you wait to file the 1099s with the IRS, the more you will have to pay in penalties and interest. So make sure you get those 1099s out in a timely manner. And number 5 is don't be scared to file an extension. So if your business is a partnership or if your business is taxed as an S corporation, your tax return is due by March 15th. Of course, unless the 15th is a holiday or a weekend, in which case it comes due on the following business day. Now, if your business is a C corporation or if you are a single member LLC, your tax return is due on April 15th. And the same thing applies here. If April 15th happens to fall on a holiday or on a weekend, it's going to be due on the following business day. Now, if for some reason you're not ready to file your tax return by the due date, it's okay to file an extension to give yourself more time to gather the information that you need. But do keep in mind that an extension is an extension to file your return and not an extension to pay your taxes. So you still have to pay your tax liability by the due date, which is April 15th. And if you're not sure how much you're going to owe, then it's a good idea to do a good guesstimate. You can either look at last year's tax return to see how much you paid, and then you can just pay the equivalent of what you paid last year, or you can just do, or really, if you have been paying your estimated taxes throughout the year, this really shouldn't even be an issue, because if you've been doing things the way you're supposed to, which is paying your estimated taxes every quarter, by the time April 15 rolls around, you're really just filing an extension on the tax return because you have already paid all of your taxes because you paid them throughout the year, each quarter. But if you're one of those people that did not do that, then what you want to do is you want to sort of just see if you can run some numbers, have your accountant run some numbers to create an estimate of how much you may owe and send that payment in with your extension. Okay, so preparation, when it comes to tax time, preparation is everything. Tax time does not have to be stressful. Okay, so getting through tax season as a cannabis business is all about preparation. By implementing the right procedures throughout the year and partnering with an experienced tax professional who is well versed in cannabis, in the cannabis space, your cannabis business will avoid penalties, you will minimize your audit risk, and you'll stay on track with your business goals. So make sure that you find an accountant that you are comfortable with to help you navigate the tax and accounting landmines, okay? Make sure that all the necessary information you need at tax time is captured and organized on an ongoing basis throughout the entire year. Okay, not just rushing and trying to do that at tax time. Now, preparing for tax season shouldn't be a one-time thing that happens only at the end of the year. It should be something that you are constantly doing all through the year. Thank you for joining us this week on GeoCannabis Accounting. Make sure to visit our website at geotaxandaccountingstrategies.com, where you can subscribe to the show by clicking on the podcast tab so you'll never miss a show. While you're at it, if you found value in this show, we'd appreciate a rating on iTunes. Or if you'd simply tell a friend about the show, that would help us out too. I am also available to help cannabis business CFOs, investors, and other accounting professionals with tax planning, gap accounting, as well as cost accounting. Please don't forget to tune in to our next episode. And this is where I sign off. Have a great day.